Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Good. Awesome. We're going to do something really unique today. We're going to be talking about your the data wrapped around your 401ks, your IRAs, all your accounts that just pulled back with this stock market here. And we're going to see, do we think that, our 401ks will start to recover, our IRAs or Roth IRAs? If you're contributing dollars there, should you maybe be buying inside of this market pullback? And we're going to use data to do this instead of saying, my opinion is. So we're very data driven here. And it doesn't mean that things are going or not going to happen, but we're looking at those kind of trends. Those, do people like buying pullbacks or not? And specifically, what do we have going on now? So let's dive in here. Unfortunately, this is quarter over quarter performance for the S&P. A lot of you have S&P related investments or mutual funds and things that track that stuff inside of your 401ks and IRAs, whatever. So, unfortunately, it looks like we're going to have a down quarter. This will be the first down quarter since 2023, this little guy over here. And if we zoom out over the years, this is just going back 10 years, you can see it's kind of rare to have a down quarter. When we do have a down quarter, they tend to be a little aggressive there. But at this point, we're only down about 2%. So we'll see what happens there. So what I thought we'd start with is just what's the average performance by quarter? And then we're going to drill deeper and deeper and deeper. So any quarter, this is all over here. We're saying, okay, the S&P in blue, dark blue, over the lifetime of the S&P, the average quarterly performance is 2%, right on the dot. Over the last 50 years, for whatever reason, there was some stronger moments in there that raised the average. Over the last 25 years, we've underperformed, or the S&P has underperformed its long-term average of 2% a quarter. You say, okay, something's going on here, and that's probably think about the financial crisis, the dot-com bust, COVID, right? Some real shocks into the market. That's probably what's skewing the last 25 years because that's pretty much when all that happened. Okay, so the first thing we're going to look at is the average performance by quarter, we're in Q1, is lower than its long-term average, just a little bit. Here's the catch, though. Over the last 25 years, the first quarter has been really tricky. Remember when COVID started? That was in the first quarter. The market peaked inside the first quarter. Oddly enough, you want a fun stat here? The stock market's most recent pullback, the peak in the market, happened on the same day as the peak in the market from COVID, right? So it's like March 19th. So you go, ooh, creepy, right? Anyways, so that's the reason why one of the reasons why this first quarter is kind of an underperformer. Now, retirement account wise, your investments and stuff, of course, you probably are used to seeing the fourth quarter being really strong. Some people say the Santa Claus rally, all that good stuff. Either way, the fourth quarter dominates in terms of average performance. Now, probability of being profitable wise, or I should say the positivity rate is highest in the fourth quarter as well. The first quarter, since the inception of the S&P, 61% chance that the first quarter will be positive. And you can see how that ranks against everything else. It is below the average. It's about in line with the shorter term averages there. So gives you an idea, right? Fourth quarter just kind of dominates. Okay, now let's take it a step further. So what we wanted to do is say, only show me the performance in the following quarter when we had a down quarter, right? So we're going back the whole way here, but we're saying, what happened after this? That. What happened after this? That. What happened after this? That. So that's what we're getting a gauge for here. So performance in a down quarter. Now, remember, we're not looking at Q1 anymore. We're saying we're going to pretend and we know that Q1 is probably a down quarter. What happened afterwards? Well, here's where we start to get some good news. After a down quarter, the next quarter, if it's Q2, tends to be quite positive. It's almost the best one. It's only second to the fourth quarter, and the fourth quarter pretty much wins for everything here, by the way. But we can see that the second quarter tends to outperform any and all scenarios. Cool. Well, if you're adding to your 401k or it's fallen and you're like, do I change investments? Do I get some help? Do I add more money? What do I do? Well, now you know that you have at least a little bit of we call a tailwind helping you out. Doesn't mean it's going to happen, but at least you're putting something in your favor instead of just guessing what you should do. Now, what has happened? We had looks like we're going to have a down quarter. We also had a 10% pullback or a correction inside of that quarter. So now we're going to go a step further and say, well, what happens when there's a correction in a quarter? Because you could have a down quarter and just the market's just down like 1%, right? What happens if we have a 10% pullback like we did March 19th to February 13th? February 13th to March 19th. I said it backwards a minute ago. So what happens after that? Do we see that next quarter is positive? Yes or no? And is it something we can use here? This is where I think it gets interesting. If the first quarter has a correction, the second quarter's long-term performance dramatically outpaces the long-term performance of any other quarter that did the same thing. Cool. Besides the fourth quarter, right? We're just sort of discounting. And actually it beats long-term, right? Just in the short term, it doesn't. So we say, we're focused on the second quarter. We had a correction. Hey, wow, there's a great historical trend that shows, people at least try to buy the market. Also, percentage-wise, meaning what's the probability that you're going to have a positive outcome, a positive quarter? 67% over the long term, 83% over the short term here, which is even more interesting because what happened in the last 25 years? You have the dot-com crash, you have COVID, you have the financial crisis, right? Real estate bust. And so that tells you these shocks, these corrections, we'll call them a shock, but these little shocks to the market create interest from the buyers, and there's a greater chance of you being having a positive quarter. So I just thought that was really cool. One other thing, I just want to point this out. If there's a correction in the third quarter, which we're not there yet, but if there's a correction in the last 50 years and 25, 100% of the time the market was higher. I had to check that. And that's true. And it's not often that you get to say 100% of the time this will happen. But so far, that's the stat. It doesn't mean it can't be busted. Of course, I'm not trying to, create a magic 8-ball here, but you get what I'm saying. So, moral of the story, we're most likely going to have a down quarter. It looks that way. But it's not the end of the world because it happened in the first quarter, which tends to be the one that has the weaker performance anyways, but it tends to have the next best outcome in the second quarter if we have a correction, if we had a down quarter. So using that kind of data, it's not an end-all be-all, but it helps you go, well, yeah, I'm not going to stop contributing to my 401k. I might even up it a little bit while things are cheap if you can. My Roth IRA, I want to make sure that's invested for growth. Most of you, that's the way that should go. If I'm going to do Roth conversions, maybe now's a time to start doing some conversions because we have this seasonal uplift here that could, happen again. I don't know. So when it comes to your retirement accounts, your 401ks and everything, of course, I hope you keep us in mind at Jazz Wealth. That's what we do. We don't care if you have $1 billion or you're just getting started. We like to help everybody here. And we'll see what happens. We'll keep updated on all this with you and have some fun. All right. Adios.